Trading. My name is Alejandro Zambrano, Chief Market Strategist with TradeCaptain.com and Amana Capital. And in the next 600 seconds, I'm going to provide you guys with a quick overview of markets such as the Eurodollar, Bitcoin, crude oil, gold, and the DAX 30. Before we start though, as always, I need to stress that trading financial markets is unfortunately risky and there's a general risk that we lose all of our invested money. So please bear that in mind before you trade. Don't forget as well to click here at risk disclosure at tradecaptain.com. And if you're new to this, we usually hold this webinar Monday to Friday at 9 a.m. London time. And you can join here if you have any questions or anything. You can just use the chat box here to be able to interact. You need active account with YouTube. You log in on the browser you're going to use and you can say hello or ask any questions. Now let's begin. So this is the euro versus the USD, and the London session is underway, and there's a little bit of a decline in the euro today in this 4-hour chart. It's a small decline of about 36 pip, and I think we could potentially continue to drift lower, especially if we take out the slow here, which was created yesterday. What is interesting, of course, is that the market did try to rally to the upside but failed. Usually breakouts very late in the day, like this one at 10 p.m. London time, tends to fail. So remember that most breakouts in currency markets at after 4, well, depends exactly if you're going to look at it, but in essence after 3 p.m. London time tends to be false. Of course, if they're not driven by some sort of macro fundamental news. So if you're trading the Aussie dollar and you have the RBA rate meeting or Aussie dollar employment numbers, then yeah, that could obviously trigger a breakout, and we can act on that. But if it's a normal day like yesterday, then we shouldn't be chasing breakouts in the evening. So I think this could move a little bit to the downside, and I think, you might remember we said look to buy here and we said look to buy in the breakout. I think well, I personally already booked profits here, and I'm just waiting for a little pullback here to 21.24-ish, maybe worst case all the way down to 120. And of course, I'm going to be bullish and long as long as the market is trading about 119.10. Here's the price of Bitcoin. Now, I was long myself. I actually bought here in December, and I kept it for the move to the upside, and I thought, of course, it's going to continue to head up higher. I was waiting to add to the market, and the market moved down. And in these webinars, we said, turn bullish at 14,000 and 14,500 more or less. And unfortunately, though, at the end, the market declined for unleveraged loss here, or a price change of 18%. Now this market traded below support, and the next support levels is down here at 8,961. And usually when you take out the low, the market is going to try to target that low. Now I wouldn't sell here because one is betting on a decline. Obviously you can sell because you could potentially see it trading down here, but the risk reward ratio of going short is not optimal. If one would have shorted here, the stop loss would have been here, which is a 23 pip stop loss, percent stop, and then versus a 24 pip risk. But I think there's not like obviously if you really think this Bitcoin is all a fraud, then yeah, of course, this can go down to 0, so you have no issue selling. But personally, and if you look at my Twitter feed for the market cap and for cryptos and things like that, I do think it's gonna bounce. So I don't think there's a genuine opportunity here to actually make the 24% return by risking 24 pip, because you risk 24 to make 24. So I wouldn't sell here. Now in the short term, I think of course it can go up, and then it's probably going to go down, and then we'll see if it goes all the way down to the low. If it goes all the way down to the low, then that's fine as well. Personally, I just like to buy, so I'm going to wait for the downtrend to end. So right now this is the last high, which is 14,626. At one point it's going to swing up, and then probably it's going to swing down. So I will most likely be able to lower my key level, and then the market goes down like this. So imagine that there is a high here. So whenever we break those highs, at that point I'll turn bullish. For now, this market is bearish, and traders will most likely sell on a rebound, try to sell here for this to go down to the downside. Here's crude oil, and here as well. I mean, the market, I've been bullish for down here, and I've been waiting for this move to the downside. It's trading sideways here, and obviously, if we take out 65, then most likely this can head to the upside. Traders or some people that try to be clever are selling most likely, and they have their stop loss on the other side. Why are they selling? Well, they're selling, one, because they want to book profits, but then you have people that are betting on a decline, and these guys are looking at this and saying, well, it rallied quite a bit already, so maybe this can move down. So if we push above here, I think those stop loss orders are going to get triggered, and we could rally to the next point, which is 67.10, 67.13. Now my preference is a bullish breakout, or B, a corrective move down to 62.45, and then look to turn bullish. Look in the way this is correlated with things like the euro dollar and pound dollar and Aussie dollar, New Zealand dollar, and even gold. I have a feeling this is going to go down. In fact, if you're trading currencies in general, be very careful, because everything is correlated. So buying a dip in pound, buying a dip in the euro, buying a dip in the Aussie dollar, it's like having a 3 times big position. So if you risk 1% per position, then you're in essence risking 3% now because of the tight correlation. Here's gold, a very good example of the same. You see here, a nice break to the upside, move down a bit and then up, and then I suspect this can go a little bit to the downside, and I'm gonna adjust the entry a little bit here to 1326. This is a 50% correction. I took a simple Fibonacci from the low to the high, and I'm taking it from the low because this is a trend defining low. So as long as you're above this level, the short-term trend will be bullish, and a pullback will most likely be met by buyers, which are going to try to lift the price to this upside here. Now keep a very close eye on gold. Not just going to break like in the next month or two, but if we take out 1,374, then we will leave this whole range behind, and the market could head to the upside. What is obviously interesting is that with crude oil gaining the way it is, the way the economies in the world are gearing up and doing well right now, at one point we will have inflation, and when people start to get afraid of inflation, we tend to see gold rising. So this could be a nice opportunity. The alternative is that we have a steep stock market pullback. Now this is the German DAX, and the German DAX yesterday did try to move to the upside but failed to do so. I mean, moved up on the daily and then moved all the way down. If we flip back to the 4 hour, you can see that the market is in some sort of a short-term corrective move, and I still think it makes sense to buy down here at 13,021. Why? Well, because the market is in some sort of a range, and around these lows people are buying. So corrective move to the downside and then up. Let's take a look at the economic calendar, and then we're gonna answer a question about pound yen. And this is the economic calendar, and today the big event is the Bank of Canada rate meeting. Don't quiz me on it yet. I still need to make up my mind 100% on it, but the market is positioned for a rate hike. So obviously if we don't get a rate hike, we're not going to see a rally, and the Canadian dollar is going to soften. We're going to cover this event live. The actual statement is out at 3 p.m. London time. But we're going to start 15 minutes before to give you a background, and then as we get the comments out and a statement, we'll do some analysis on that. For today, in 50 minutes time, we got consumer price index from the Eurozone. That's obviously important. Now this is the number for December. I'm not sure if this is the first or the second estimate. Headline inflation around 1.4%. So there's not really much happening here. I think this must be the second estimate. And core inflation really is what is interesting. Anticipated outcome 0.9 versus 1.1 in the prior month. If it's higher than 0.9, then that could cause the euro to gain a little bit. But I don't think it's enough. We need to wait for that pullback before the market gets, starts to bottom out. Rallies higher. We need that correction in the euro. Bank of England. Member Saunders is speaking today. Not sure if he's gonna say anything. Industrial production is always interesting to watch if you're an economist, but market participants don't actually trade on the back of that. Instead is the Bank of Canada minutes. Bank of Canada rate meeting, 5 hours and 49 minutes from now. And then we have the beige book coming up, but I don't think people are going to focus too much on that. Okay, so let's see if we can ask some questions. I'm just going to load the live trading room. So we got a question about the pound yen. So let's check that out. Pound yen, I looked at it this morning, and it is unfortunately not much is happening here. This is a 4-hour chart, as you can see here on the top. The market is in some sort of a short-term bullish bias, and the market could, move to the upside, and maybe take out this high as long as shit about 49.43. And if we take out that high, let's take a look at the big picture charts. Like, how much higher can we go? Well, you have a high here. I think this is just ahead of Brexit, and this is a high here from June 24th. This is the Brexit vote day. So at 160. So if you look here at the daily, traders are probably gonna maybe break to the upside, lift this, but just bear in mind it's a bit choppy. And of course, the dips, I think traders are gonna buy that as well. If we take a look at the sentiment, I think we should have the pound yen positioning here. So you see here the pound yen positioning is relatively, well, actually let's 62% of people are long, over 38% people that are short. So it gives us a positive ratio of 1.63. So 62 divided by 38, that's 1.63. So this ratio, when it's either plus 1.5 or minus 1.5, it's a good indication to what may happen. And the way this is positioned, retail traders are betting against gains in the pound. A majority of people are actually short the pound yen, which would indicate that weeks to come, most likely we're going to have a bullish breakout. So we'll see the pound yen gaining instead of losing out. Okay, it's now gone a little bit more than 600 seconds, so we're gonna wrap things up. I want to thank you so much for joining me. You're very much welcome to join me tomorrow, same time here at 9 a.m. London time, in the live trading room. If you want to sign up for the webinar today, Bank of Canada, then just click here on webinars. We also have something else interesting coming up. It could be good to refresh on things, but we're going to look at the top forex trading chart patterns. So we're going to look at double bottoms, head and shoulders, and things like that. And how do we use them? Where do we enter? Where do we put stop loss? What are the profit targets? So check this out. This is a little bit more info on that. If you register here, you can join. The cool thing though, so you know, if you are members of Trade Captain, if you registered to a webinar in the past, then you can just click here on register, log on, and you can log in here, and you don't have to sign up and put all the details in. You just actually click on which webinar you would like to join. Okay guys, have a great day. I'll see you guys tomorrow, same time here, and please don't forget to like the videos on YouTube, and as well don't forget to retweet and share these videos with other people. We have had a nice little number of people watching. In the beginning, I think it was like 20 people watching these webinars when I started them, I think about 1.5 months ago. Now we reached 100, and let's see if we can grow this. When I used to be working for Daily FX, I used to get about 500 views and 300 live people, and about 500 people that would watch the recording. So help us grow it back to those numbers. And yeah, why do we want to do that? Well, because the more people that actually like the stuff, the more likely is that we're going to do it, and vice versa. Have a great day, and see you guys tomorrow. Thanks.